Good day, my name is Andrew Milligan. I'm Head of Global Strategy here at Standard Life Investments. I'd like to talk to you today about two things. Firstly, the quarterly Global Investment Group, which is the gathering of the most senior fund managers here at Standard Life Investments. We've just held our meeting and we are thinking where next for the world economy and financial markets. And then point also towards Global Outlook, our quarterly publication, which will be summarising not just the house view, but also many of the thoughts from some of the key fund management professionals, both here, London, Boston, Edinburgh. Let me start with the quarterly Global Investment Group. Our discussion, of course, was largely about the US economic recovery and especially the cyclical recovery which we're seeing in Europe. But a lot of our discussion was actually about the situation in China. And you will find more on that actually in the Global Outlook. China, of course, is an economy that is beginning to slow. It has a number of problems related to the sizable amount of debt, some bad investments, some environmental issues which it currently faces. And a key aspect of our discussions was how slow could the Chinese economy grow during 2015 and into 2016. We are reassured, though, by the resources, the capabilities which the Chinese authorities have to control the situation. Large foreign exchange reserves, of course, but also the ability to direct capital within that economy. And so although we do see some relatively slow growth, say 5-6% per annum for that economy, much less than in previous years, we do expect it to stabilise into 2015-2016, and that together with the cyclical upturn in Europe and the continued strength in the United States does suggest to us that the world economy can still see slow but sustainable growth over the next 12 to 18 months or so. This does have implications for financial markets because we are of the view that the US Federal Reserve can raise interest rates from the fourth quarter of 2015. And indeed, against this sort of better backdrop, even the UK economy should start to see higher interest rates into 2016. Implications here, of course, for not just short-term interest rates, but also bond markets and currencies. You'll find more details about that in the Global Outlook publication. How is the House view assessing this sort of situation? Well, to sum it up very briefly indeed, we are still pro-risk. We still suggest that investors should be looking at a mix of equities and real estate, some of the corporate bond markets as well. It must be said we have lower risk in our portfolios than, say, back in January. Valuations are something that needs to be thought about, and there are a number of risks, of course, facing the world economy, situations in Greece or the Middle East being two examples. I mentioned before our Global Outlook publication. This is our quarterly where we show not just the house view, but also thoughts from a large number of other asset managers from across the company, for example, in fixed income and equity territory. But some of the other articles I'd particularly like to draw your attention to. Real estate, for example, is an interesting one. The article looks at how the United States buyers are particularly interested in European real estate at this phase of the cycle, looking to see the advantages of some of that cyclical upturn I was talking about. In currencies, we're talking less now about what's happening to the US dollar or yen or sterling, and much more about what's happening to some of the emerging market currencies. So I recommend having a look at that article in particular, an examination of how the foreign exchange reserves and debt levels in some of those countries are giving us some relative value opportunities across the emerging markets as a whole. This is a multi-speed world, certainly, and you'll see in Global Outlook how our fund managers are being very selective, whether it's in terms of developed market equities or emerging market debt, very selective buying, very activist buying in this sort of environment where there's a large number of strains and stresses, plus that monetary tightening, plus that slowdown in China, plus that recovery in the United States and Europe, which I talked about. So the Global Investment Group has thought about the house view, and we're still pro-risk, and you'll see much more detail about how that's put into the different portfolios in the Global Outlook publication. Thank you very much indeed.